Verizon has to be one of the most disliked stocks on the market today. In a market where growth stocks are falling and investors are looking for value and dividends, Verizon simply can't get a break. The stock is trading for an 8.2 price to earnings ratio. The dividend yield is 6.9%, and yet the stock continues to fall. So what is it the market sees from this stock, and why am I very bullish on Verizon's future? Well, let's get into the numbers based on the most recent earnings report and where Verizon might be going over the next few years.
Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now.
Let's start by looking at a few slides from Verizon's recent third quarter earnings report, because this gives us not only the most recent quarterly data, but also data that goes back a little over a year. You can see here that retail postpaid net adds were only 8,000 in the most recent quarter. Now, this is something the market really focuses on, and Verizon has not had a lot of growth over the last year. You can see that in these numbers right here. So that's really something that is concerning for investors. You're also seeing an increase in postpaid churn. That is the number of customers that are canceling each month. But I think this is really interesting right here. Business customers are up 197,000 in the last quarter, while the consumer business is down 189,000 subscriptions. We'll get into some of the reasons for that, but I think that's something to kind of put a pin in right now, because Verizon seems to be doing really well among corporate customers, but not very well among particularly value-oriented customers, and that's where companies like T-Mobile and AT&T are taking market share right now. Next, let's look at that value segment. This is something that Verizon has really struggled with. You can see that since buying TracFone, they've been losing customers really by the hundreds of thousands. That changed a little bit in the most recent quarter. Prepaid net adds were 39,000, but you can also see here that prices are down. This is something that Verizon is playing with over the last few quarters, is how are they going to build bundles and provide pricing that's compelling when there's many more value options in the market from some of their competitors. But this is where the numbers get really encouraging for Verizon. I think that if they can just simply stay where they are with the consumer and business segment from a wireless side and add broadband, that's going to be a really appealing business. You can see that 377,000 broadband net adds in the most recent quarter. 342,000 of those are fixed wireless. This is a wireless router that you just simply plug into an outlet, and it works just like cable from your local cable company, getting broadband from them. I've actually been using this for about 9 months now, and it's faster than the cable option where I live. And so it's a really great product. And you can see that the uptake in this market is really, really compelling right now, especially among the consumer segment, but businesses are moving to this as well. So this is really where Verizon is going to see growth over the next few years, is not necessarily in adding more people having smartphones, but actually people bundling smartphones with broadband. I will get to why this could be really the core of a new bundle in the future. But I think this is really something that investors want to pay more attention to, is the momentum that's going on in the broadband segment. Here's a look at the business segment, and there's a few things that I want to take from this. One is that 1.9% growth year over year is not all that impressive, but you can see that the global enterprise segment is actually in decline, while small and medium businesses is increasing pretty rapidly, up about 10% year over year. And the wireless service revenue up 5.7%. So that's better than overall revenue. These are a little bit mixed results here, but if Verizon is able to pick off small and medium customers and get them to add things like broadband, I think that could potentially move its way into bigger companies. This could be the start of growth in the business segment. And so this is something to keep an eye on here as well. Very low revenue growth right now, but something that could be improving in the future. Now, when you add all those businesses together, this is what the consolidated results look like. Revenue was up 4% in the most recent quarter to $34.2 billion. Total wireless service revenue, which is, I think, really what we want to keep our focus on, is up 10%. So that's a pretty impressive number for a very mature wireless market. And that's where we're seeing some of the growth in broadband really kind of show itself. Add all of this together and you get this statement of cash flows. And with a company like Verizon, we really want to look at what their cash flows are. Cash flows from operations down slightly year over year to $28.2 billion. Capital expenditures are up. Now, management did say that they're probably at the peak of their capital expenditures in building out their 5G wireless network. So that's a number that we should see coming down over time. Free cash flow, you can see, dropped almost $5 billion to $12.4 billion. Again, that would be a concern for investors. That's one reason that the stock is not very highly valued right now. And then dividends paid is $8.1 billion. This is where the company is really focused on growing that dividend slowly and surely over time, even though cash flows are now getting a little bit close to what they're paying in dividends. You'll also notice here that debt is coming down slightly. I think that's a really good sign for Verizon. I would actually like to see them pay down debt a little bit more aggressively. I know that they don't want to cut dividends. Investors don't generally like that, but debt is a risk factor for a company like Verizon. And if they have to start refinancing their debt at much higher interest rates than they currently have on their balance sheet, that's going to be much more costly for them. So I'd like to see that debt number continue to come down over time. Guidance here was also not that impressive. When you look at the 2022 numbers, you can see that service and other revenue is going to be down slightly to flat, and then adjusted EBITDA is going to be down slightly to flat as well. So if you're an investor just looking at these numbers from 2022, I think it is reasonable to question how much you really want to pay for a company that's not growing all that much. But now let's get into why I think Verizon is really building a foundation for growth over the next 5 to 10 years. I talked about the growth in broadband, and when you add together service for smartphones and then service for the home or businesses with broadband, I think that's a compelling 1-2 option. But what's really interesting over the last year is that Verizon has been adding more and more content bundles. So you can see two here. I'll highlight the one from Apple. They're including Apple One with some of their subscriptions. So this is another bundle from Apple. So if you have a smartphone from Apple, maybe even an iPad or an Apple Watch, it could be really compelling to bundle all of those things together under Verizon and just pay one bill and get a whole bunch of services with it. The other one that they're doing is with Disney, and that includes Disney Plus, Hulu, and ESPN Plus in their services. So this is a similar strategy to what cable companies did with content over the last 4 or 5 decades, is really adding content together that maybe doesn't necessarily make a lot of sense individually, but you bundle them all together and now you have a really compelling option. So the core of this bundle here is your wireless service for your smartphone and or your home, and then add in streaming services like the one from Disney, like the one from Apple. I wouldn't be surprised if we start to see more and more streaming services added to this bundle. So maybe it would be compelling long-term to cut Comcast off altogether, for example, and just move that over to Verizon, basically go from a wireline service to a wireless service, and from a linear TV service to a streaming TV service. This could be the bundle of the future. That's why I think moving to more and more broadband is really telling for Verizon. I think that's going to bring the kind of customers that are going to be really interested in these streaming services. And if Verizon can offer a little bit of a discount to buying each of these individually, it'll be really good for everybody. It makes it a little bit stickier for Verizon and for the streaming providers, and maybe a little bit better deal for consumers. So where does Verizon go from here? Well, the way to think about this stock is that it's a value right now. You got a very compelling price to earnings ratio, a very high dividend yield at nearly 7%. So if nothing else changes, you're getting a really good stock, a really good value, and I think a very sticky business and profitable business long term. What's really exciting about this and could make this into a growth stock is adding that broadband in. As these numbers get bigger and bigger, that's going to be more and more of their revenue and then bottom line revenue, and then potentially creating a new next generation bundle with a bunch of streaming services, starting with Disney and Apple. These are kind of the power players in streaming right now. If we can pull companies like Netflix or maybe Peacock into that, this may be the new bundle that drives Verizon's growth over the next 5 to 10 years. This is why I think Verizon is really a compelling stock. It's not just about what they're doing with smartphones and their service contracts. It's about how they're adding more and more to that in products that they're not necessarily making themselves, but pulling in from some of their streaming partners as well. What do you think? Is Verizon a value stock that has growth potential, or is this a stock in decline? You know, that's really what the market thinks right now. But what do you think? Leave a comment in the comment section below. Give this video a like, and of course, subscribe to the Rive Project. Thanks for watching. I'll see you next time.